two secrets to making it in this business. One, managing your size, knowing when you should step on the gas versus when you should ride the brake. Two, being at the right place at the right time. This week, we're going to be discussing commodity markets, but going about it in a different approach. Taking it from the approach of being in the right place at the right time and knowing when you should step on the gas versus when you should ride the brake from a size perspective. I'm going to start with oil, as usual. And the thing I want to bring out here is that, to a large extent, oil has pretty much been doing nothing. This is the RTH session, the 9 o'clock to 2:30 Eastern time session. And the reality is the market really has done a whole lot of nothing, pretty much since June 24th. We've had a little bit of range expansion, but in all reality, we're really just doing nothing. In this case, this would be a situation where, knowing that the range expansion is not there and volatility is to a large extent reduced, this would be a situation where you would be, if you're even going to be trading this, you would be reducing your size. Right? Volatility is a trader's best friend. If volatility isn't there, and range expansion is not there, then you have no real reason to be stepping on the gas and increasing your size. So this would be a case right now, and you're going to see it across a few markets where the volatility has pretty much died. We talked about it a few weeks ago, and volatility, which for a trader is the lifeblood of what you do, it's really getting to a point now where it's almost non-existent. Okay. So we could see here in oil that it's pretty much dead. There's no other way of saying it. It's just dead. Okay. If we look out to, let's just say, natural gas. Again, these are all going to be RTH charts because I want to point out the New York session is a dominant session. So I want to point that out so you can see what's going on outside of the gaps. Natural gas, same kind of deal. It's just dead. See this? We're just dead. It doesn't take a rocket scientist to see this. Another factor, or we'll call it a third factor, which really helps traders succeed, is thinking out of the box. Everybody can see the chart. Everybody can read the fundamental data. It's the out-of-box thinkers that really do well. And part of that is knowing, again, when you should be there versus when you shouldn't be there. When you should step on the gas versus when you shouldn't step on the gas. We've looked at two markets just now, and you can see that both crude and natural gas, I don't want to use the word dead money, but they're to a large extent dead money. Gasoline, same kind of deal. All of energy is pretty much, to a large extent, dead. Heating oil had a big pop, and then it got rejected. Maybe that's going to get a little bit of fire underneath. We'll see how the week looks. Heating oil was acting a little bit as a forecast mechanism for the way crude was moving. It's not really so 100%. I wouldn't rely on it, but sometimes it gives a little bit of clues. But in truth, even any clues that's been given, they're not doing it. Energy is pretty much dead money. And if we look out to some other things, let's look out first at platinum. Platinum had a big move, obviously. It broke out of the chop, came back into the chop. They're looking fine, but they're becoming very, very hard trades. Gold, to a large extent, you could say whatever you want about it. It's dead. This is just one big giant chop zone. Gaps, chop, gap, chop, gap, chop. There's nothing really going on over it. One that really highlights this, you look out at copper. Copper, really, you had this late day move, and then we've pretty much just chopped around, and you could say we're flagging, and maybe we're going to pop out. Again, we're not really doing anything. You get this kind of shock and awe move, you would expect some kind of reaction. That's basically been dead. Why it happens is outside the scope of this. In truth, if you look out and you get this big move, you would expect some kind of continuation, which is just not the case. Let's look at it. Silver also had a gap, kind of trying to figure out what to do, but really not a whole lot there. Go out to beans, same thing, just not really exciting or anything to really do there. Wheat, same thing, not very exciting. Corn, same thing, not very exciting. You have downtrends, but they're just not exciting. There's nothing here to get you to be really involved. Why do I bring this up before I move on to some other markets? Knowing when you should be someplace versus when you shouldn't be, as well as knowing when to step on the gas and when to ride the brake, are crucial to making it or to being successful. Thinking outside the box is a third ingredient, but thinking outside the box relies a lot on when should you be there versus when you shouldn't be there, and when should you slam on the gas versus when should you ride the brake. I'm starting with orange juice. The reason being is I want you to see this move here in orange juice. And it was a rather big move. And you can see on the week that we were coming in, chopping around, and then we had these two igniting bars. This was on tariffs to Brazil. Can you trade orange juice? No, you cannot. It just shows you about when you should be in something versus when you shouldn't. It's got a coffee. I wish it was more exciting than it is. Unfortunately, it's not. We're just not really having a lot of volatility. We'll talk about that in a second. Coffee, downtrend seems to be broken. We are starting to move up a little bit. We'll see where this goes. We may end up in the 330, maybe even take 335, 340, and then see how this plays. Like a lot of these are tariff driven. Sugar. Sugar, not that exciting. Downtrend remains, but it's not really doing anything, which will make sense shortly. Let's just look at cotton and cocoa, and then we'll wrap it up. Look out at, let's say, cocoa. Cocoa has been interesting because cocoa started to pull in a little bit more than I think a lot of people were anticipating. Yeah, it had a big day on Friday. It's definitely starting to retest some interesting spots. We could get down to this area over here from October, which is about 6,400, 6,440. I think we're ultimately probably going to get here. We may retest this, might even slice through it. And then on the cotton side, not doing much, which does make sense. So you're going to say, if commodities aren't really moving around and the volatility is not really even there like we would anticipate, why even bother discussing? Well, for a lot of portfolios and a lot of portfolio managers and a lot of sophisticated investors, they view commodities as an insurance policy. Think car insurance. You get a car insurance policy, you pay premiums, but you don't expect to get into a car accident. You have it there as a hedge. That's the whole purpose of car insurance. Commodities act the same way in portfolios at times of lower volatility. They're a hedge. You're paying premiums, which means you're sitting in markets that aren't really doing anything. They're not really making you money. You have rolls. There's no price appreciation. There's no dividends. There's nothing. And really, you have it on really more as a hedge. It's basically portfolio risk management. So a lot of the volatility that's not here right now does make sense. At some point in the near future, volatility will pick up. It's been a little bit more of a subdued summer. Weather has been a big factor in natural gas being subdued volatility-wise. Oil is holding up there, and there's a lot of push-pull. You have short-term fundamentals that are working on the bullish side. You have longer-term fundamentals that are working on the bearish side. You have the curve that's working on the bearish side. There's a lot of push-pull and a lot of back and forth that's just keeping prices subdued. Another factor, which is something you need to also consider, is that it's the middle of July or the middle of the summer. So volatility and liquidity does drain out. So you have to keep your expectations in check. I thank you for watching, and I'll see you in the next one.